Technology and disruption pose two main challenges for real estate. The first is navigating those technologies and how they affect its purpose. It's about asking, what do people want from any given building and piece of real estate? Whether it's about how they're shopping, how they're working, or how they play. Above all things, it's about an unrelenting focus on the end user experience. The second challenge is around the heightened pace of obsolescence as real estate adjusts to new technology and new business models. These technologies and business models have a very high probability of occurring, but actually a very low predictability in terms of the exact timing and way this will play out for our market. A great example of this is driverless cars, which you can't go outside and see it in the world around you today, but will absolutely be relevant to real estate investment decision making that's forecasting an exit in the year 2030. As an industry, we don't always enjoy change. We haven't embraced it as fast as other areas, but we will enjoy irrelevance even less. So this is an incredibly important dynamic area of our market. The challenge for any investor in 2019 is ensuring that each investment is being compensated for the risks attached. In all of the developed markets we operate in, we are by any measure relatively late cycle. The US, for example, is in its 9th year already of consecutive growth. So the question we get a lot from investors is, should we be taking on additional risks to try to generate additional return? We're really encouraging investors to think about three things. Firstly, thinking about the long term and creating stock in the right cities, in the right locations. Secondly, thinking about needs-based investment, so looking at those alternative sectors such as student housing in the right cities. And thirdly, we're advising investors not to compromise and not to gamble on cities that don't have the right scale, don't have the right long-term growth prospects, and don't have the quality of life that means their ability to secure talent is rich. There have never been more challenges and more opportunities for managers to adapt than in 2019. The level of capability required has never been broader across technology, across research, across sustainability, both to protect existing value but also to identify new opportunities. Those opportunities won't necessarily be in the same places in the future that they have been today. And so we really are very focused on having the capital to be able to invest alongside our clients to be able to prove concepts and unlock those opportunities. The reality in our industry is that managers will increasingly look to pool resources and we'll see some consolidation, a smaller number of larger global managers. But alongside that reducing number of global managers, we'll see some really nimble, dynamic, specialist operators that bridge into the management sphere and offer some really great solutions that are focused on the end user's experience.